the RBI is closely watching the recent move by Equitas Small Finance Bank to tap into the user base of Google Pay for garnering deposits. The regulator wants to gauge the deal's implication on the banking landscape. Within days of the Equitas move, Amazon Pay also entered into a similar arrangement with wealth management platform Covera, and the RBI was said to be uncomfortable with the idea of tech giants getting linked with retail deposits. So why is the RBI so concerned about this development? Before we can answer that, we need to look into what the Equitas deposit scheme is and how it works. Equitas has announced that Google Pay users can open a fixed deposit account with it using Google's unified payment interface. How does this work? A spot in the Google Pay business section has been given to Equitas. Similar to a QR code, a spot is a visual code that is only available for Google. When a user scans a spot for a given business, it takes them to the platform or website of that business, which in this case is Equitas SFB. After the deposit tenure has been selected and the amount finalized, the payment is made using UPI. Google simply debits the account linked with the UPI ID and credits it to Equitas. Google's role ends with the payment transfer. Subsequently, the relationship moves to Equitas and the customer's bank account to which the UPI is linked. Equitas is simply using Google's distribution channel as an alternative to reach out to new customers. Meanwhile, Google charges a fee from all businesses using spots on Google Pay. Now we come to the sticky part, the RBI's concerns. The real concern is Google's involvement here. That's because the RBI keeps big tech, which includes companies like Google, Amazon, Apple, Facebook, and Microsoft, under scrutiny. In the RBI's words, these companies are too big to fail and difficult to regulate. The experience of developed countries shows that these companies are not easy to rein in. Consider the following scenario. What if all banks end up having a spot or QR code on the big tech platforms? That would lead to big tech becoming the term setters for these banks. We could end up with a situation where these platforms could then pull any bank out of the system for failing to meet the criteria set by the tech firms. Customers, by now comfortable with using the tech firms as apps, might just not bother going back to any bank that is not part of that ecosystem. As a result, the bank concerned might fail, and in an interconnected world, the entire financial system could go down with it. Last but not least, in such a scenario, these for-profit tech giants could end up having a say in public policy matters. Equitas, its technology provider Setu, and Google have all clarified that the tie-up should not be interpreted as anything more than a usual product offering. In a blog post, Google Pay has refuted claims that the search giant was trying to encroach into the banking territory. Google is already a leader in the UPI space, and the UPI payment mode processed 3.5 billion transactions worth 6.4 trillion rupees in August. To put these figures in context, UPI transactions during the month were over 9 times higher than immediate payment service or IMPS in volume terms and more than twice as much in value. So what happens going forward? For now, the Equitas deposit scheme continues as any other product. Meanwhile, the RBI is carefully weighing if this could eventually lead to big tech's backdoor entry into the Indian banking system. The regulator's stance on this issue may be reflected through a working group panel report on digital payments.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.